USA and China seem to have signed a trade agreement this weekend. There's no word on the detail yet, but Asian markets are positive this morning. My name is Mark Williams. Joining me is Francois Savary, CIO of Genville Wealth Management and Consulting SA. Francois, hello.
Hello, Mark.
Thank you for joining us. Can we put the saga of trade tariffs behind us now and start looking at microeconomics again?
I'm not sure. You need to be careful. The first thing that you need to have in mind is that the UK-US deal is not a complete free trade deal that some were expected. It's a limited in scope, and the 10% tariff that was imposed by the US administration will remain in place. Second, with the China trade discussion in Geneva, I'm not sure that they are going to announce a trade agreement. What they are going to my point of view, to announce is a kind of retreat on the tariff level that they put in place, which were ludicrous at the end of the day, because there was no more any possibility to trade. As Mr. Besson said, this was like an embargo on Chinese good. I think that they are going to come out with a framework in order to discuss further the main issues that are need to be solved in order to get something in the medium to a long run that is going to really be a trade agreement. So we need to be careful. The trade issue is not completely behind us, and there are a lot of countries that are still expecting to see something coming from the US.
Container ships are down 40% in terms of trade between China and the US. That's just in the month of April. Are you saying then that this situation can continue for another few months?
I think that the disturbance that were introduced by the tariff policy of the US in the course of the last 2 months is going to have an impact on economic activity, on inflation in the very short term, and that we will have to observe very carefully the data this week. As you mentioned, we will see some development on the retail sales, on the industrial production in the US, which are hard data, and people will look at them very carefully. And there are some issues about inflation. It will be very interesting to see how the CPI numbers are going to come. It's not so much a matter of what will be the yearly change on inflation rate. It will be what is happening on a monthly basis. Are we seeing some inflation tensions surfacing in the numbers on a monthly basis?
My question is, therefore, will we already see that reflected in the numbers for the month of April?
I think, and I read some articles that were telling that we need to be careful, and that's especially, for example, on the car issue, the fact that the tariffs on cars were imposed brought people to purchase car earlier than expected. So it could have a significant impact on the monthly figures of the CPI number.
Donald Trump is reportedly turning his attention to tax cuts. The 10-year bond remains stubbornly high. I'm talking in terms of its yield at 4.4%. Could we have a situation whereby unfunded tax cuts creates tensions in the bond markets, like happened in the UK a few years ago?
I'm not sure that you can compare the situation between the UK and the US situation. Nevertheless, you are right. And I think what is interesting is that on the one side, you had some positive development on the trade issue. And that's the reason why suddenly you had the bond yield coming higher in the course of the last 10 days. From a very low level, because people were fearing recession and those kind of things, suddenly there is some tension. We are at 442 this morning. This is higher than it was last week, because people are expecting that nevertheless you could see some negative impact on inflation, that economic activity is going to be is not going to fall into recession in the short term. And as you mentioned, there is this tax cut issue. That is going, to my point of view, impact the bond market for the coming months. What is also very interesting on that front is that Mr. Trump came out with the proposal that he wants to increase the tax level or the tax rate on the highest or wealthiest American, the one who earn more than 2.5 million a year. And that's something that is very interesting. It tells you that this issue, how to finance a tax cut without creating a disruption for the bond market, is something that the administration has in mind.
Or in terms of the bond market, the sum up is that the numbers this week, CPI and PPI, are very important, and therefore beware of tensions in the bond markets following bad numbers. Is that right?
I think, yes, I think that, people are enjoying the fact or are buying the fact and equity future of moving higher this morning in the US. People are buying the very good news, which is, okay, the US and the Chinese are able to discuss and they are going to try to find a framework in order to be able to put some negotiation in the coming months. Nevertheless, the bond market is something that is very important for equities also. And as I said, if you have the scenario of recession receding, it means that the bond market need to adjust to different economic condition. That's something that is happening right now. The issue of the tax cut is going to be a very important one. I think it's going to be very, very difficult to implement a tax cut, a general tax cut, even if the wealthiest Americans are going to pay more. It's going to be very difficult for the administration to put in place without provoking some ruction on the bond market. So we need to be careful because the bond market is not going in the right direction for the equity market. This is the reason why I have some doubt about the ability of the equity market rally that we see to continue in the very short term.
Let's come to the FOMC. Jay Powell held his press conference last week. There were some words of caution, but generally speaking, I found he was pretty upbeat in the circumstances. What should be the takeaway that we have from his comments last week?
That he is cautious, that he's not going to lower interest rates very quickly. And we discussed this issue last week. I think that they are not going to be able to cut interest rates before July and in the second half of the year. As he said, he's very data dependent. He knows that the impact on tariff is going to materialize. He knows that it will have an impact both on CPI, inflation, and growth, but he's not able to tell us, okay, I can foresee that it's going to have more impact on that part of the economy or on that part of the economy. So he's navigating with some kind of lack of visibility as everybody, and he doesn't want to give an indication to the market that he's going to act in a certain way in the very short term. So he keeps the door open. He will judge data by data if there is a need for him to act on the interest rates.
I think he mentioned that, the dot plan provides for 2 rate cuts by the end of the year, but the markets are looking for 3. Who's right?
I think he is right. I think the data are right. And I defend this idea for quite a long period of time. I think the market got ahead of himself when it comes to the rate cut by the Fed. It's not possible, to my point of view, that you had 3 rate cuts by the end of the year with the current economic condition in the US.
Let's come to pharmaceuticals now. Donald Trump has announced this weekend, or last few days, I think, a favored nation status. I'm not sure how this works. Favored nation status for the US in terms of prices paid for medication. He mentions drops in prices paid by the US consumer of between 20% and 80%. What does this mean for our pharmaceutical stocks?
In the very short term, very volatile, and I think that it's going to impact negatively the pharmaceutical companies in the very short term. Nevertheless, don't forget that he tried something already in the first administration. There was significant reaction. He was not able to impose anything at the time. You have strong reaction from pharmaceutical companies to this proposal. I think that once again, you see that the Trump administration is trying to enter into a bargain, and that's something that they are keen on doing. It's proven since January. They try to put the pressure on the pharmaceutical company in order to obtain something in terms of price cut. I don't think that it's going to reach the level that was mentioned.
In light of what's been happening in the last few weeks, how have you adapted your portfolio, and what changes do you anticipate in the next few weeks?
As I said, I am worried that the equity rally that came in the course of the last 3 to 4 weeks is a bit excessive. There are a lot of uncertainty. There is a lack of visibility, be it on the trade front, be it on the economic front. I think that people should refrain from thinking that everything is behind us and now it's back to where we were at the beginning of the year. So on the equity side, we did not move significantly, except that we introduced an investment in India. We have decided to use the condition on the India market in the course of the last weeks or 10 days to introduce an India investment on equity in an ETF on India. That's what we have mainly done on the equity part. We have not significantly adjusted our bond strategy. We remain with the view that there is no point in trying to increase duration in your bond portfolio for the time being. We have continued to purchase credit at the expense of government debt because we remain quite negative on government debt, especially US government debt for the medium to long term. We have reduced our US dollar exposure in our account. This is something that we had introduced at the end of last year and we continue to do. We believe that at current level, for people who want to get less exposed to the US dollar, this is a point to reduce exposure. We have increased our exposure to the Swiss franc on the other side because we believe that it's a currency that remains interesting in the current environment. We have stick with our gold exposure despite the fact that it's slightly correcting. We believe that it's a consolidation. We believe that for people who want to get invested into gold because they missed the rally, a level around 3,150 is a good entry point, and that the market should test again the 3,500 in the coming months because we believe that the geopolitical, economic, and political uncertainties will remain with us in the course of this year.
Interesting you should mention India. I noticed that India has overtaken Japan in terms of GDP just very recently, I think, but in terms of dollar equivalency, not in terms of purchasing power. Do you think that despite what's happening between India and Pakistan, that the Indian economy can continue to power ahead, and is that why you're starting to invest in India?
Yes, and there is also, for example, remember, I think it was 2 weeks ago, 2.5 weeks ago, Apple announced that all the American iPhone will be produced in India by the end of 2026. I think that India is going to become a base for a lot of US company to get production line. I think that also India is negotiating a trade deal with the US that could come in. So this is the kind of things that we are playing by deciding that we make a single investment in India for the time being.
Do you see India as overtaking the role that used to be held by China as a producer of low-cost goods?
I think that, yes, this is the case, but I think that the mistake that the US made with China is not going to be made with India. And that's the reason why I believe that they are trying to negotiate this trade deal. This is going to be an important deal for India that is going to set the condition on which you can develop a bilateral economic relation, and not in the same way as they did with China, which, if you remember, the big question was, okay, they were accepted into the World Trade Organization with a special status. The US did not really look at that, and it was something that they should have considered earlier to modify the status, and that brought to this huge imbalance in trade. I think that the US are going to be much more careful in terms of being dependent.
We've gone through a lot, but are there any subjects that, are there any questions you'd have wanted me to ask that I didn't?
No, I think that we cover most of the things that are currently in my mind.
Thank you very much, Francois.
You're most welcome.
Bye-bye.
Okay, bye-bye.